Our weekly watch list videos are back, and we are starting off with the dollar index, US 30, US 100, of course gold, which everyone likes to trade, and then we've got things like GBP USD, Euro USD, and Aussie USD, and a few Japanese yen pairs too. We're also going to have a brief look at things like Bitcoin and Ethereum, and just summarize everything that's going on at the moment with regards to geopolitical tensions, risk event headlines, markets and how they're moving, and the election volume, and different trends that we need to address. So we're going to get into it. As always, if you could please leave a thumbs up, like, subscribe, that does wonders. We're also doing various giveaways, so make sure you check out our other videos and our other series, because we're going to be documenting things like Think Capital and Think Markets, and how we're moving our prop capital and profits into our brokerage firm, and we're going to be documenting this whole thing. So tune in, make sure you subscribe, make sure you comment and get involved and ask any questions, and I hope you enjoy the video. So as always, we're going to start with the dollar index. This is going to be our weekly watch list video for the week commencing the 24th of the 11th, 24. We follow the dollar index, we follow stock indices, we follow FX pairs and commodities as well. We have different watch lists, which is what you can see on the side here, the dollar index and stock markets, and then we have gold and associated USD pairs. So these USD pairs will typically feed into the dollar index performance, and we combine the dollar index performance with stock indices and commodities, and we use it as a different form of bias. So we're going to talk about that, we're going to get into that, and then we obviously have our Japanese yen pairs, so GBP Japanese yen, Euro, and USD Japanese yen. The reason we build our watch list up like this is because of correlation, market correlation. When one instrument is maybe moving upside, we can expect another to move downside, and vice versa. We have other forms of correlation, for example, risk on, risk off, and we can see, for example, when US stock indices are moving up, we might see, converging moves on the dollar index, or US stock indices maybe move down, and we might see things like gold move up, depending on what's going on with the market and what kind of global politics and tensions are kind of moving and causing those risk event headlines at the current time. So for example, we have US-China trade talks. Always we have that kind of conflict. We have things like the elections, the market volume off the back of the elections. We have new Prime Minister in the UK. We have things like obviously Ukraine and Russia. We have Israel, Palestine. There's so much that's going on at the moment which is causing such big moves. We are basically looking to understand a bit about that and factor that into our analysis. Now, we're going to run through technicals more than fundamentals. As we move into the week, we start then discovering and unfolding fundamental headlines, economic data points, and that's what we share in our free group and mostly our members group. Now, the dollar index has been quite a big one. It's been a very, very bullish ride for the dollar index, and there's no stopping that really. 1, 2, 3, 4, 5, 6, 7, 8 bullish weeks back to back, and we've broken each zone every time. With a bit of consolidation here at 104, we've just obliterated that upside. So, that's telling us, right, well, there's no stopping us. We're breaking zone after zone after zone. Where can we, look to get our entries? I'd probably say maybe 106, 500. Are we going to come back and wick into that region? Maybe, maybe not. We don't want to try and catch a falling knife, so to speak, but something of a setup would look similar to this, with probably targets around 110 initially, I'd say. Now, that would look something similar to this, a very, very high time frame. We don't trade the dollar index individually, so that's not something we actually look to trade, but we use it in confluence with other forms of analysis and other instruments that we can look to trade. We have US 30, so US 30 again on the big daily time frames. We always want to be starting on the daily time frames. The program we're building at the moment basically hones in on the top-down analysis. It's really, really good and detailed for both CFDs and futures trading. So whether you're kind of day trading on a futures basis, or whether you're CFD trading, you might be trading and swing trading, instruments like gold, US 30 and the like, there's a lot of information on that that will really help you kind of make sense of everything and have a kind of a logical approach to trading. And we always say, if you can have a logical approach and understand the reasoning behind the decisions you're making, you'll get on with trading a lot better than someone that's just jumping between strategies, don't really understand where they're coming from, the reason they're making decisions, and their executions. So Dow Jones, we are really pushing that all-time high territory. We have been on gold, we have been on Bitcoin, a lot of pairs. We are no doubt trending, and it's kind of a matter of trying to get these long entries. So whilst we are setting these highs, we want to be obviously looking at the lower time frames, and if we do something like so, you can see this neckline broke previously. We had a bit of exhaustion from this previous sell-off, and now we're basically looking for something maybe around 43,750 price entries long, or rejections from 44,500 could be good. There's a lot of play around this level, and as we set all-time highs, we often do see pullbacks like so, and then we breach higher. Again, it's going to be a bit of a tricky one treading, around this, because there's a lot of other things that we need to factor in as well. So, for example, any latest headlines, previous data points. We've had obviously lots going on recently with Fed interest rates, etc. So we're just tightening up these zones. We're breaching this zone as it stands, but again, I'd either be looking to try and catch long opportunities as low as possible, or try and catch reversals with as tight stops as possible, with highest yielding reward. So if we were looking to long, we'd probably look to cover something like this. So 100-point stops, very big, like really, really big stops. But inevitably, because markets are so kind of high volume at the moment, we're seeing massive, we saw 1,500 points on the Dow Jones last week, I believe, or the week before last. A lot going on. Now, this is obviously one buy opportunity. This is one sell opportunity, 44,500. So again, if we're kind of annotating this, what does this look like for us? We'd probably say, right, 44,500 half price. We have all-time high price, and maybe we look for some PA confirmation or lower time frame structure break. So signs of us reversing, signs of exhaustion. Just like we've got here, this is a big time frame, but something like this to say, right, we're trying to go lower, we're trying to go lower again, failing to go lower, right, we're giving up and bulls are taking over. We'd look for the same thing, but just the inverse correlation to that. Now, again, we don't really have anything imminently, unless obviously we gap downside and we close maybe 44,300, and then we could look to sell off from here. But what I am going to do is set an alert here now for 44,500 price, and we'll say that is our sell zone. We'll see what happens there when we get there. There's a lot of opportunities on these indices and stock indices over the last couple of weeks, where we have really moved aggressively very early on in the Euro London session, hundreds of points. And that's typically what we'd see at the US stock market open. So again, if we gap down, this could be a play as well. The message here is we're not really in the most attractive zone to be taking any setups as it stands. Last week we had this absolute monster rip. I think we had our take profits at around here about 5-6R, and we absolutely obliterated that support and sold off as much as 17R. So that was really good. And then you can see from this subsequent correction, if we were to measure our fibs from, let's say, swing high to swing low, we are really touching on our 61.8, and it looks like we've attempted to resist here and again here and again here and again here, but it looks like we might be breaking. So what we're going to do, we're going to try and align what we see with US 100 with US 30. So again, if we're looking to short, that could look something similar to this. We could gap down at around 27.50, and then we could see the next selling position with stops just above all of those highs to the left, 80 points. We could be targeting the previous lows initially, and then again, we've still got a bit of a void to fill here. We could even set fresh lows and take support at around 20k, let's say 20k whole number psychological price. So that could be a solution. As it stands, you can see we're marginally breaking higher here, and you can see we're marginally breaking higher here. So if we were to continue the same theme from last week, what we would probably expect is this consolidation area and this all-time high price. So if we annotate this all-time high price, we could certainly look to target this region, which is why we had these previous zones marked on. So if we could maybe get an entry around 27.50, that could be attractive. Again, stops would be tricky based on whatever we have around here during recent trade. So this could look something similar to this. Again, we're basically saying, look, markets could go up, markets could go down. We're planning both scenarios, and we're going to be responding to what happens as markets unfold, and that Sunday markets open, Monday markets start getting into full flow, and we start to see an outcome, and then we can obviously respond accordingly. Now, this would obviously be targeting the all-time high price, and then when we get to this region, that could look something similar to this. So again, if we are looking to capitalize on all-time high relief, so for example, we've been bullish, we might then see somewhat of a dollar relief, and then we start to sell off. So again, as we are climbing higher on the dollar index, this could start to fall, and we could start to see these instruments start to sell off. So again, we're kind of in no man's land at the moment. We've got a zone which would normally look like a good sell. However, that last 4 hour to close the week throws a spanner in the works. Now we'll move on to gold. Gold has been absolutely heroic. If you guys remember from our free group and our members group, this was the previous setup from last Sunday. So Friday markets closed, Sunday markets opened, and there was absolutely no return for this pair. So again, bullish, 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 bullish. If we look at the daily candle, you can see again every single day, 1, 2, 3, 4, 5. You know, very, very bullish. And the Friday, in fact, being probably the most bullish of the sequence. Again, Monday very bullish, Friday even more bullish. So again, you know, that's saying, look, are we gonna start to slow down now? Are we losing momentum? Evidently not. And the next target price would be 27.50. So we're not trying to catch a falling knife, so to speak, but we do revolve our strategy around pivots, zone trading, and you can see the zones that we've got marked on here. You know, these are the zones that we've been playing from previously. If you guys remember, we also had a nice entry in this region here, which we you know, shared to our group, which looked, I think, something similar to this, with targeting that same kind of price at $2,700 an ounce. Obvious reasons being it's that whole number, psychological number. So again, another really good setup there. We're going to remove these for the time being. We don't want to keep singing on that glory because we're looking for the next monster setup. So again, you know, we're breaking slightly higher just above our zones, and we've got a continued theme now across gold, across US 30 and US 100, sorry, US 30 and US 100. So again, let's see what happens as markets open, because this is going to be our preferred sell zone. This is a big, big, big area of supply here. Big area of supply. We are necking on, you know, nearing towards that kind of all-time high price, so $27.90, just shy of $2,800 an ounce. That would certainly be our, you know, area of target in the near term. You know, there's talks of $3,000 an ounce in the near future, within the next kind of, you know, 6 to 12 months. That could well happen much, much sooner. So if you look at the previous extension, you know, we've had from this consolidation low here, I mean, you've got in literally 4 months, you know, in 4 months you've got $450, $470. You know, we only need 280, 290 to push towards $3,000 an ounce. So, you know, we are really, really putting the pressure on now, and rightly so. We've given, you know, the geopolitical tensions that we have with regards to everything that's going on, Russia war, etc., Palestine, new elections and governments and bits and pieces. So it makes sense. You know, the markets are very, very wild, and crypto markets are really taking off as well. And I think that's having a knock-on effect of what we're seeing across other markets, obviously, as they coincide and kind of move together in a risk-on environment. Now, risk-on environment being, you know, people are looking to yield good returns, aggressive returns, worthwhile returns, which is why they put their money into the US stock market, which is why they put their money into things like Bitcoin, because they're yielding, they're risking, they're making money. Now, we're looking for a bit of a risk-off relief, I would say. A lot of people are saying markets are overbought, and, you know, it definitely looks that way. However, you know, you can't just you can't expect that reversal, because if you did, you'd be gonna, you know, getting bitten on the arse, you know, a handful of times. And you want to always try and trade with the trend and trade between the zones. So anything that we do short will typically be short term, you know, selling in line with, you know, these recent zones. And there was a good opportunity from this zone here, and you can see when markets are in a bullish environment, the bearish move is always a lot more aggressive, because we're buying, we're in a buyer's market for long-term incentives like US stock indices and gold, and they're slowly being bought up and sequentially being seeing growth. And when kind of, you know, you see big profit taking and market dumps, these moves are always going to be more aggressive and faster flowing than the climb up. So it's more of a regimented uptrend and more of an aggressive dump and more of aggressive sell-off. And you certainly see that in you know, the likes of Bitcoin when these come as well. Really, really, really bullish. But again, when you see these bearish markets take over, you'll see the rejections and you know, how fast they can flow to the downside. We also have things like AUD/USD. So again, we're using this GBP/USD and Euro/USD in line with the dollar index more so. We haven't been trading these for a long time. Even CFDs, we've not really been following this too much. And 105 broke, which was very surprising. The next zone would probably be around 102, I would argue. and even 1-to-1 would be quite extreme. I don't want to start setting my targets there at the moment, but I am happy for GBP USD to start selling off because we've got quite a few big payouts coming out over the next couple of weeks and likely the next couple of months. So if that can push more towards 1-to-1, that'll be absolutely fine for me. That'll make my payouts look much bigger in my UK bank account. So, you know, that's kind of where we are at the moment. GBP USD, we've got 125, so 125 could be an interesting zone. If you look to the left, we've got support here, and we've got an area of consolidation, a bit of demand. You know, there's various different elements of play that we can follow, and it all makes sense, but certainly the opportunity for us more steers towards US stock indices and gold. We'll have a quick look at GBP USD, and this is certainly GBP Japanese yen. We were playing from this 195 zone previously, historically, and then we were playing with this 195-600 price. We've moved these. I do apologise. I've been recording content for the new CFDs futures course, and we've just kind of done some back testing on this, and this is why this has moved. However, you know, the principles still apply. We've still got the same zones of support, 193-200, 193-100, and again, this 195-600 price is certainly a point of interest as well. We've just added on Euro USD and USD Japanese yen. We've only just added those back on. So there's not an awful amount to report here, but this is going to be something we're going to be following because we're going to be using that in analysis and comparison to GBP Japanese yen going forward. So, you know, you're going to see more sight of that, especially in the members group. You're going to have 3, 7, 8, 9, 10 setups a day, typically at least. So with obviously the respective calls. Now, we obviously have Bitcoin and Ethereum as well. Now, this is very, very, very close to 100k per token. And again, you know, the extension's just been absolutely crazy. There's nothing we can really report on this other than I would probably expect a correction from 100k. You know, 100k is just a huge milestone. And if you have to think logically, when you do hit these milestones, a lot of people, retail and institutional, will have targets set at this price, knowing, right, when we've hit that price, let's dump all of our coins and let's buy them back up at maybe 85k or 70k or 75k or whatever it may be. They've got their zones and prices in their mind, and, you know, we're small fish in comparison to. So, you know, I would kind of expect, and, you know, like we're seeing now, very, very, very marginally small sell-offs. But, you know, if we do break 100k, the break upside could be very, very quick and aggressive as well. So, you know, it's obviously hard to call, and we're not trying to call it. You know, we're just trying to kind of massage our investments and bits and pieces and our strategies in line with what's going on. And to be honest with you, we don't really add much towards our Bitcoin. We're just leaving it as it is and letting that kind of do its thing. Same with Ethereum, same with Litecoin, same with Solana. We kind of just set and forget that. We're not too interested. We speculatively leverage it. So when we are speculatively leveraging it, we could see Ethereum drop down to 2,700 again with this top here. From 3,500 was the key kind of psychological price. Again, we've got supply. We've got 3,500, which is a big psychological number for us. Similarly, we have 100k, which is the most significant psychological number we've had recently. So food for thought more than anything. Certainly food for thought. We're solely focused really on, again, US 30, US 100 gold and probably GJ and GU for the moment. But in all honesty, there's not a massive amount we can report on currently. So, you know, let's see how this week opens with, obviously, you know, Sunday market opens. Are we going to experience any gaps? And then also we've got things like, you know, Euro London markets as well. You know, are we going to see that big aggressive move as we move into these sessions? And if I quickly go to the hourly time frame here, let's go to the 15-minute, in fact. The thing is, you know, we'll open these charts now, and these moves won't seem so significant in the scheme of things because we basically got London open, London. Here, for example, you've got Thursday. We actually caught this sell-off, you know, a really nice, attractive dump. Again, here we've got London sell-off. Here we've got a bit of consolidation, and, you know, early London, we've got some nice moves as well. Friday, did we experience anything on Friday? So Friday, Thursday, Friday, not so much on Friday, but of course, US stock market open. So, you know, you've got New York at 230. What do we see here? A big dump. We see another one here, a big dump, nice bearish moves. New York here, we've got a big sequence of selling pressure. So again, timing is, you know, timing is everything. And we're going to be talking about this, a lot more in certainly our course and our program for CFDs and futures, but a lot more in educational series and content going forward. So hope you enjoyed the video. Hope this makes sense. Hope you can kind of factor this into, your forms of analysis going forward and what you look to trade this week. But again, there's going to be more. Sometimes these are going to be, really active and ready to trade. Sometimes they're going to be like they are today, and we've kind of got to sit on the fence and wait for something to happen. Wait for some more information to unfold and build on that. So we'll see you on the next one. Don't forget to like, leave a comment, subscribe, all that kind of stuff. Get in tune with all of our new videos, but also our new series with Think Capital and Think Markets, where we're growing our prop. We're moving our prop profits to our capital, personal capital, and we're growing these in tandem side by side. And it's going to be an interesting series. And we'll see how far we can take it. A nice benchmark will be December this year, and we'll see how far we can actually take that in 2025. So again, hope you enjoyed the video, and hope you all have a good trading week.